Welcome, and here we're looking at the S&P 500 on the weekly chart, and as you can see that we're in still quite a strong trend to the upside, and we're in intermediate wave 5 here with the brackets, and within from 4 to 5 we're looking at minor waves within that, the orange ones, the 1, 2, 3, and we're looking for an A and a B and a C for the fourth wave, and then for the fifth wave. Fourth waves tend to be a bit complicated, and especially being at 1800 as well, so we need to be a little bit mindful, but as it goes so far, we'll just be looking for a 3-wave swing here. And drilling into the daily chart now. We'll drill in further into intraday in a moment, but we're looking down here for minute wave A, which has been completed, and now we're looking for wave B up through to here. In wave B there will be a smaller A, B and C here, and then we'll be looking for 5 waves down in C. Our target was the 1750 area here, of the closest largest number to the 38.2 retracement level for wave 4 here. So just drilling into the 4-hour chart here. Because we've got 5 waves down through here, that means that after a corrective move, then we'll see another 5 down through this way here. But currently, as you know, we've been looking at an impulse 5-wave structure up here, and because we got 5 waves here, that means that after a correction here, pulling back 50-60%, we'll see another 5 waves up through to here. Now the norm for this is to retrace the B wave to retrace back up 61.8% of the A wave here. However, that's only a rough guide. Sure, sometimes it can nail it right on and it's a bit of a wow factor, but other times it can, well, I just find generally, yeah, so these blocks of supply like this where the most volume is turned over here and here are the real sort of resistance, and they normally line up with a particular number, and in this case here the 1800, in this case here the 1850 would start there. So because the A wave was quite strong through here, the C wave can have equality to this one here, so we may end up getting quite a high retracement level up through here. Otherwise, the C wave can take the distance, 61.8% of the A wave through here. So yeah, just drilling in there a little bit further on the, I'll just move on from the 2-hour chart, I think. Yeah, just into the 15-minute chart here. The A wave that we're looking for to the upside here in 5 waves is the 1, the 2, I think I've got this right here, the 3, the 4, and the 5th wave still unfolding through here. So I sort of see a little sort of reaction here and a little pop up here, which may go to 1810. It may even go higher through there. Once that's been done, then we'll be looking for an A wave, a B wave, and a C wave here to make the B wave, and this is the 50 and 60% retracement level as well. So it looks, you know, we should see it stay within in this group 2 here, may even be shallower than that at the 1772 sort of area here. But yeah, an A and a B and a C, and then 5 waves up again for wave C, and of course once that's finished we'll be rolling over. So most of the other indices are in the same boat as well, so you can pretty much use this this particular wave count for that. When we're looking at the Dow Jones, it's the same as well. You can see here that obviously we're working with 15,800, which is a minor level and an important one as well. And you can see that from as the market came down here to find support and then eventually finding resistance here. That's a classic trading levels pattern to the downside at a level. But once again, the 5 little waves to the upside. So it can push up a little bit higher through here, but then we'll be looking for an A and a B and a C, and then further up to the 16,000. So if you've been long since the 15,500 where the signal was, then look to exit at the 15.8, which you probably would have done on the Friday anyway. Okay, the DAX is in the same boat as well, just in the bigger picture here. It's the same 3rd wave the fourth wave here and the fifth wave up here. Once again, the A wave down, the B wave, which we're tracking now, which will be up 61.8% of this move down through to here, and 9.5 is a nice round number for that to target to the last high here as well, and then further down, but exactly the same. A bit messy on this chart, so I won't worry about that, but exactly the same count as the Dow. The FTSE here, I'm just going into the intraday here because it's just got a little bit of a different count here. It's still got further to go, and we have to remember that the FTSE and the ASX can be a little bit different in terms of their structures to the other US markets. So, but looking at this as up for one and back for two, and then looking at all of these here in blue here as just the third wave up through here. Now, if I'm wrong here, and then a fourth and then a fifth up here. Now, if I'm wrong here, the place that I'd be wrong is that this would be an A wave and a B wave and a C wave terminating here. So the idea was to trade above the 6,500 here to the 6,600 here. So that's reached there now. Yes, this can push up higher through here. However, just be mindful that, you know, this particular structure here is ending somewhat, or if you were going to trade, make sure that 6,600 is a nice tested support, and probably keep the positions really small and look to scale in on 6,610, but don't look to add above that because it will terminate with the US markets. The ASX 200. A couple of things here. First of all, the cash market. The cash market pushing up to 52.10 would give us overlapping wave structures and put us in more of a bullish mode. So that 52.10 on the cash market's important. The ASX 200 CFD here that we're looking at, well, the same count as the S&P 500, so we can look at it going up into group 1 of minor level 2 here, which 52 here is it's in minor group 1, 100, 200 and 300, and it's the pivot within that. And then we're looking at subgroup 1, which will be the 10, the 20 and the 30, and it's likely to stay within group 1 and then have its correction through here. Normally in a bull run we see Friday and Monday being quite sort of powerful, and then Tuesday profit taking, and Wednesday's kind of where you start to get, well, Wednesday and Thursday are like sort of big news days, so to speak, and they are where you get the swings in the market. So yeah, we see Wednesday as a V-shaped day, which will help create this ABC correction here that we're looking at. The other point too, this is trading up at 5,200 here. The SPY CFDs have got the same count as well, but they're lagging. You can see that they're quite a distance behind here. So that's kind of telling us that there's the SPY is trading in the future. These are March contracts, so they're sort of predicting what will sort of happen in the future. So they're lagging the other markets. So it's a sign that they're not leading. So they're not leading the future. So they're leading the future in weakness. So just be mindful of that. But once again, being at 5,200 here, in one way or another, we will see some type of correction across this level here. So, if you've done well in the trend up, just be careful you don't get chopped around in this particular ABC correction here that will take a good few sessions to get out. All right, well, that's it. Thank you.